Hi and welcome to another edition of Top Tips Tuesday. This week's tip is for those property investors considering entering the market or like some more clarification on the property market or the property clock and understanding the intricacies and how important it is to work out what part of the property clock we are currently in. So first of all, realise that Australia is a big country. So when you hear property market updates, price updates about markets, just be very specific where you're actually looking to buy in. So the Australian market is very diversified. So there's no one Australian property market. So base it on state and suburb level. This is where the data is really going to play a key part of your strategy and working out what part of the property clock we're in. So the property clock, imagine 12 o'clock, top of the cycle, that's where we've had really strong growth, the property market's booming, and it really gets to a point where people start to question, is that good value in that property market, and can we get finance? Sometimes there's a change of the bank's lending policies, things like that. Confidence levels drop, and that what we find after that peak of the market is we generally find a pretty stagnant clock, which is generally about 2/3 of the cycle. So from 12 o'clock to peak, the property market will generally dip a bit, on average about 5 to 10%, and it stays pretty stagnant for a period of time until we get to the bottom of the market, which is 6 o'clock, and that's where people realise, hey, the market isn't really going to drop any lower. Property prices are starting to stabilise now, and home buyers and investors realise they're actually better to get into the market. And as that demand comes back into the market, that starts putting pressure on the properties for sale, pressure on prices, and from that 6 o'clock point we start to see prices start to move up to about 9 o'clock, and between that 9 o'clock and 12 o'clock we find that real frenzy where there's much more buyers than sellers, and we see record prices being achieved, auction clearance rates at extremely high rates. Now in terms of the property clock between the top of the market and the next top, the full cycle, on average in Australia for homes in most residential suburbs, the cycle has been about 5 to 7 years for property prices to double. We are in very different markets now. We have a lot of changing economic conditions that really affect the market. Coming out of COVID, we saw on average about 30 to 40% capital growth within a very short 2-year period in many markets. That wasn't simply sustainable. And what we've seen over the last few months is that market started to slow down as we've seen those interest rates climb to try and control inflation. And what we're seeing now is we're seeing the market actually turn. So a lot of the experts are predicting that we've already passed the bottom of the market. I personally believe that. We're seeing a lot more demand come back into the market. But again, refer back to the data. So this is why it's really important to work with a property specialist that's looking at the data, or have the data available yourself to look at what's moving in the market. So some of the indicators of the market moving are higher auction clearance rates, less days on market, and median prices starting to increase, which is what we're currently seeing if you look at the CoreLogic data. And just remember, the data is about 3 months behind. So if you're trying to time the top of the market to sell and buy at the perfect 6 o'clock, you'll never get that timing perfect, or very rarely, because the data comes out, that market's already changed. So just remember, the data is an indication, it's the best indication, but also looking at local market conditions and speaking to those experienced people in the market and seeing what's happening as well. It is really hard. If you're looking to buy and hold for the long term, it's not as critical whether you buy at the top of the market or the bottom of the market, but if you're a short-term property investor getting in and out of the market, it is much more important. So if you'd like to see those data reports in a bit more detail, welcome to reach out. Happy to provide those to you in those areas that you're looking to invest. So I hope that's really helped, and exciting times for coming for property, and see you next Tuesday.